Would you like to win and achieve success at what you do? Welcome to the Winner's Ways podcast, where we create winners every day. And now, your host, the author of Winner's Ways book and life coach, Bola Alabi.
Hey everyone, welcome to another episode of the Winner's Ways podcast. This is where we talk about your money and we give you life motivation so you can succeed. And I'm always excited whenever we have any special guest with us. And today, guys, we have Alejandro with us. Alejandro is a mortgage broker that helps business owners and entrepreneurs. I'm sure there are quite a number of you that you may be considering getting mortgage right now. You want to find out information about mortgage broker, how you can apply for mortgage. You want to know about the best way to position yourself. Alejandro is the guy that will enlighten us today. And because of that, I'm excited to welcome my guest. So Alejandro, how are you?
Thank you, Bola. Thank you for the introduction, and thank you for having me in your show and giving me a voice to everyone that listens to you.
Awesome. So this is perfect. Alejandro, welcome to the show. You are a winner, definitely, and you are on the Winner's Ways podcast this afternoon. So if you don't mind, can you let my audience, let them know you, tell them what you do, and how they are going to benefit from listening to us today?
Yes, I'm a mortgage broker, but I have been in finances for the last 40 years. And I chose the mortgage brokering field, meaning that I help people that want to buy a home. Right now we're licensed in California and in Florida. And we help people that want to buy a home to prepare to buy a home. It's not just the buying, but sometimes you have to put many things together. You have to look at your credit report. You have to look at your finances. You have to look at your savings. You have to look at what program you can apply. There are like hundreds and hundreds of programs. It's not just one. Yeah. And usually there are many, many rates. Many people think, oh, what is the rate? They read it on the newspaper. They read it on the internet, and they think, oh, it's this or that. That is not true. Everyone can be qualified for like 10 or more rates, and it's just a matter of selecting the one. So my job is to help you prepare and then select the program and the lender or the bank that will best fit your circumstance. And I like this job a lot because I have to use everything that I learned in the last 40 years to do this. It's not a simple job. It has many variables. And that's what I love doing. And then I usually get people that say, oh, no, I don't want you to waste your time. I was not qualified. But so far, we've never failed.
Oh, that's good. Yes. I like something that you said. You said you like your job. And yes. That is important. I know many people may not be in that position today. So this is good for you sharing that with us. Because I know if you like your job, you will be able to do a very good job. And yes. That's something that I want for any of my audience that may want to connect with you. I want to be sure that they are in good hands. So thanks for saying that.
You're
you
welcome.
Said you help them to prepare.
Yes.
And I know you talked about different things, their credits, maybe bank statements. Can you share more information with us? What do you mean by prepare? Because some people may think, oh, I just need a mortgage. Let me go to the bank. What is the preparation steps?
This is the problem. The problem is that when you look at the advertising that mortgage companies do, it's the same type of advertising as credit cards. They go, call me. I'll give you this rate. I'll give you this credit card and you can do this and this and this. And you call them and then you start to find out that it's not like that. Mortgage is the same thing. The publicity focuses on the rate, on the rate of interest. And believe it or not, the rate of interest is the least important thing.
Wow.
So when you call a mortgage broker to apply, most mortgage brokers take one or two approaches. First of all, they listen to you and they see if they can do a mortgage right away. If they can do a mortgage right away, they help you. If they cannot do a mortgage right away, then they usually, unfortunately, it's been my experience and the experience of my clients, they will not really want to help you too much because they have to put time. And people don't want to put time. And when I say time, it takes between, if you're thinking about buying a home and if you're thinking about applying for a mortgage and you've never done it before, and even if you've done it before, in reality, even if you have everything perfect, it takes like 30 days to make everything suitable.
Yes.
If not, it takes between 2 months, 3 months. The maximum I've ever spent on a client is 6 months. But it's not something that can be done tomorrow. And this is the problem. Realtors always say, talk to a mortgage broker, then I'll come and then I'll show you the house. But this is the problem. People are not motivating to talk to a mortgage broker until they find the house that they want.
That's right.
But so the house drives the motivation because you see the house, you see yourself in it, and then you become enthusiastic. And now you want to apply for the mortgage. But the problem is in a market like this, even though it's slowing, you have to act very fast. And the seller is not going to wait a month or 2 months for you. So to answer your question, when I help I prepare, it's like I look at the credit report, but in a way that is not intrusive. We do what is called a soft pull. A soft pull is like a check. It doesn't have any impact on your credit. It doesn't show anywhere, but it gives us all the information.
That's good.
And then the credit company also gives you tools. They give you these formulas and these algorithms that you can run. And you can say, you know what? I want this customer to have 10 points, 20 more points. And you can use these algorithm tools and the program will tell you, you have to do this, you have to pay down this card, you have to do that, or you have to open another card. And I don't want to go into that a lot, but it has a lot of detail that you can do. We are not credit specialists. We don't claim to do that, but we do it as part of the service. So usually the credit report preparation takes about a month because you make a change and the change is not going to show right away. It usually takes 30 days to change. So just for the credit report, you need about 30 days. Now, the other thing is this. When you apply for a mortgage, most people don't know that you probably qualify for 5 or 6 programs. In each of those 6 programs, you have probably 4 or 5 rates that make sense for you. They're all slightly different and they're within a range. Let's say they're within a range. So each one of these things has a slightly different repercussion. And we take the time to explain each one. And then we approach mortgages more like a brainstorming. So we work with the client rather than the client calling us and saying, send me this, send me this, send me this, send me this. We go, okay, what is that your goal? What is your real goal? Don't worry about the rate. Don't worry about the finances. Don't worry about the credit. Just tell me what you want. Oh, I want this house. Why do you want this house? Oh, because blah, blah, blah. Once we establish the goal, and sometimes you don't know, sometimes you need help from someone to establish the goal. If you have a good realtor, that realtor would have done that job for you. I used to be a realtor too. I used to be a luxury realtor. I used to work in commercial real estate. I worked for a hedge fund raising money for real estate. And that's how I found my niche because I tried many, many different things. So once you have your goal, once we looked at your credit, now it becomes how do we arrange your finances so you would qualify? So one thing that most people think is, the credit is the most important thing. Well, not really. The most important thing is your income because a mortgage, you're leveraging your income for a monthly payment. So the first thing is the income. The income is going to determine 90% of the outcome of the loan. The credit is going to be 9%. And the type of house you buy is going to be 1%.
1%. Okay, that's awesome.
So all of that, you need a lot of help to make all of this align to achieve your goal.
Yeah, that's good. You said there are different programs. Are you referring to different types of loans like FHA, conventional loan? Is that the program?
Yes.
Okay.
Yes, I'll give you an example.
Okay.
Like happened to me yesterday. I was talking to to a gentleman that has a son, and he wants a mortgage for him. But the son already looked at the radio, some publicity, and he says, "Oh, my son wants an FHA mortgage." And I said, "Well, why does your son want an FHA mortgage?" He goes, "Oh, because it's 3.5% down payment." And then I go, "Well, why are you going to do that?" And he didn't understand my question, and this is because of this. FHA was very popular when you had to put 20% down payment, and there was nothing else. It was either 20% or nothing. So FHA became very popular. But now most lenders allow you to put 5% and still get the home. FHA has big drawbacks. One drawback is that they charge you a charge called mortgage insurance that gets added to your mortgage, which is very high. It's about double the mortgage insurance of another lender. And you cannot remove it. If you put 3.5% down, it stays with you throughout the life of the loan. If you put at least 10% down, it stays with you for 11 years, which is still a lot.
Right.
Then the other problem with FHA is that you're going to pay $10,000 or more in additional closing costs that with a conventional loan you don't have to.
Yeah.
So basically, FHA is good when you need a lot of flexibility, when your credit score is low, when you don't make much money. That's when FHA is good. But if you make okay money, if you have some down payment, you're better off with a conventional loan. So that's what I mean by programs.
Okay.
In the conventional loan universe, you have a lot of different things, because if you put 5%, it's not the same. And if you put 10 or 15 or 20, then it's not the same if you buy a home in San Diego County, Los Angeles County. Each one has different limits.
That's right. Okay. So you said you are only licensed to provide loans right now in California and Florida?
Loans where you're going to live in the property, that is going to be your primary residence.
Okay.
If it's a business real estate loan defined as purchasing a property for investment, for rental, then we can pretty much do it all over the United States, except like 5 states.
Okay. So let's talk about the investments type of property. How much down payment do you typically require? Is it 20%? Because that's what I've known or commonly hear from people. Is that the same thing that you require?
You have 2 universes in investment. You have the universe where the property has 4, what they call 4 doors or 4 dwellings or 4 units or less, and 5 units or more. If the property has 4 units or less, like a quad, like a fourplex, like a triplex, like a duplex, or like a single family residence that you're going to rent out, then usually it's about 20 to 25% that you need to put down, because it depends on the lender and depends on the programs. There are lenders where you have to show your tax returns. There are lenders that don't require to show your tax returns. And there are lenders that don't care how much money you make, as long as you have a certain credit score and you're able to put a certain amount of money down. However, once you are in the universe of a building that has 5 units or more, now you switch completely into fully commercial. And in fully commercial is different. In fully commercial, what matters is your net worth. And you have to have between half to the full net worth of what you're buying. For example, you want to buy a building that costs $1 million, that is 5 units. The lender is going to expect that your net worth is at the minimum $500,000. Not your tax return, not your income. Your net worth. That means everything you owe, you own minus everything you owe has to be at least half
$1 million
of the thing that you're going to buy.
Yeah, that's good. So it's good that you mentioned credit score, and coincidentally, my tenant is moving and I'm getting a new tenant to my rental property, and this new tenant someone just emailed me that, hey, I have a low credit score, and I know that you also have tips for people on how to improve their credit score.
Yes.
Can you share one or two things with us?
I'm going to share one. Let me grab it from my library. I'm going to show you this tip.
Okay, that's good.
Now, if you are really serious about your credit score, go to eBay, find one of these, 7 Steps to 720. It's a binder with 6 CDs, 7 Steps to 720 by the author Philip Tyrone.
Okay.
He published this at the beginning of the year 2000, and he was a loan officer. Okay?
Right.
And he, of all the methods I've seen for improving credit scores, this is the one that works and is effective 100%. Now, he has a website. By the way, I have no affiliation to him. He's not paying me to say any of this. You know, I just bought this on eBay for $20 the other day because I saw it and I couldn't leave it, you know?
Yeah.
So he has a website called 720credit.com, I believe. But the website, we believe, is not as good. If he ever listens to me here, he's not going to like this, but the website is not as good as the CD. I'll tell you why, because here you have 6 CDs. In the 6 CDs, they are short. They're like 40 minutes each. You can listen, you can put them in your car. And in the 6 CDs, he really tells you what to do. Okay. On the website, he cuts short, you know, because people today don't want to read, they don't want to listen. So he reduced the 40 minutes to like 10 minutes.
Oh, wow. Okay. That's
and he gives you the information, but it's not as complete, and in my opinion, it's not as effective as if you buy one of these.
Okay. So 7 steps to a 720 credit score. So thanks for sharing that.
And in summary is this.
Okay.
Whatever credit you have, I think there is more, but this is like one of the gists. Don't use more than 10% of what credit you have. If they give you a $10,000 credit card, don't go over 1,000. If they give you a $500 credit card, don't go over 100. You have to have 3 credit cards, 1 installment loan that could be your car, and 1 mortgage. That is the ideal combination.
Okay. So credit utilization, you are telling us to keep it under 10%. That's very
under 10%.
That's good. Thank you for sharing that. What's the difference between a mortgage broker and going to a bank to get home loan? What's the difference?
The bank has certain programs that they want to push. So when you go to the bank, you have to qualify for their programs. If you don't, then they cannot help you. And then the employee at the bank cannot recommend someone else. Sometimes they do it, but they're not allowed to. The mortgage broker doesn't have that boundary. If the person comes to me, I can look at any bank, I can look at any credit union, I can look at any lender and find the program that he will qualify for. Because there is programs for everyone. You have 500 credit score, there is a program for that. You have 800 credit score, there is a program for that. You have 5% down payment, you have 20% down payment, there is a program for every situation. You have a lot of debt, there is a program for that. You have little debt, you have super high credit score, you have all the money in the world. Well, there is a program for that too.
Okay. One of the things that you do, Alejandro, is that you help self-employed people to get mortgage.
Yes.
I know for self-employed, they may not have pay stubs, and these are part of the things that banks will require. So looking at the challenges of getting a loan for self-employed, what are the solutions that you want to offer to them? How can they do it, in terms of getting their loan?
Yes. Self-employed is a paradox because you have a person that has a business, that have a control over his destiny. You have a person that on average makes more than most employees. However, when he goes to the bank, he's lucky to get a small credit card, if he can. Now, there are lenders all over the country that cater to those people. But because those people are the minority, meaning that you have like 90% of people that are W-2 employees and maybe 10% or 6% of people that are self-employed, even though that 6% of people drives, today I was reading a survey, the self-employed people or the small business owner drives 70% of the economy of the United States. So that little 6% drives the majority of the economic activity. However, they are the most underserved They are the ones that are always giving a hard time on the credit, on everything, because the system of loans and the system of credit is not designed for them. So this is what we do. Number one, we invest the time. Usually for an entrepreneur, it's not just a phone call, send me this, okay, you have the loan. No, we have to spend 2 to 3 months to like improving the credit, seeing what finances we're going to match with what program. Then we have to brainstorm with the client. This is not us telling them what to do. We usually find all the options, and we have a Zoom call that we're having right now, and go with the client. These are the options. So it's the time, it's the communication. People in the loan business, I don't know if you've noticed, are very bad at communicating. They are very bad at expressing themselves or explaining. So communication, time, and taking the time to research the market for those lenders who do cater, and they exist. There is not the majority, but they exist. That's how we help the self-employed. And then once we find the program, then we teach the self-employed how he can control it. Because I'll give you an example. A few years ago, I bought a car for my wife, and then the rate was like 6.5%. All my friends were saying, oh, you're so dumb, you're in finances, you should know better. You could have gotten a 2% rate, you don't know what you're doing. It was a 5-year loan, but I paid it in 2 years. So the volume of interest, volume meaning the quantity of interest, as opposed to the rate,
right,
was very, very, very small, even though my rate was quote unquote high. And we teach this to the self-employed. We say, don't worry about the rate. Yes, this rate is a little bit more expensive, but this is what you can do to make it cheaper by controlling the payment. This is something that people sometimes don't realize, that the payment you get on your mortgage is not what it should be. That's the minimum, but you can dance. You can dance around that.
Yeah, you can pay more. That's
so
good.
I don't know if I answered your question.
No, absolutely, you did. Now, considering the fact that inflation is still quite high, the Fed is raising interest rates, would you say it is still a good time to buy property?
When I started in this business, if you could get a 7.5 interest rate, that was a deal. That was a deal. I'm going to answer this with an example. 2 weeks ago, I closed a property for a lady. She's paying on the single family residence 8.5%. You go, wow, 8.5%? Well, she's a businesswoman, and she has a business where she provides services for elderly people. So to her, instead of fighting for the rate, this is the only program she could qualify, by the way. But she said, Alejandro, I've been trying to buy this house for over a year. I could never qualify anywhere. I don't mind at the 8.5. It could be even 12%, and I was still making a lot of money. So for business people, what I always say is like, concentrate on the business model and your goal. Don't concentrate on the rate, because she bought this house. She's paying 8.5%. She's making a fortune. Versus, no, 8.5 is too much. Maybe I should try for 6. So to save $300 a month, she's jeopardizing a business that produces over $100,000 a year. So this is what we try to help the business owner, because the publicity and the advertising focuses so much on the rate. People sometimes lose the orientation of their goal and how relevant is the rate or not. For most people that don't have a business, they just have a house and they're just working. Unless the rate is at least 1%, there's no point on you of doing anything. So if you're a regular person and you have a regular job, and let's say your rate is 5, and all of a sudden it goes to 4, advertising says refinance. But for 90% of the people, it's better not to do anything. Only if it's less than 1%, it's probably on some cases okay to consider refinancing. So imagine, that's the true nature of the rate. But we are trained and we are advertised like crazy that we have to focus on the rate when the rate is not the most important factor.
Okay. So there's a listener out there right now. They want to connect with you so that you can help them through the mortgage application process. How does that process work with you? Is it just reaching out to you? I know you said you have Zoom call. I don't know if you do that with every of your customer. Can you walk us through the process?
Usually the first thing I do is I just listen to them. I just have a phone call and I ask them to tell me their story. And everything they say, I take it at face value. I don't ask for a single piece of paper. They say this is how much they make. They say this is how much they owe in debt. They say this is how much they have in savings. And I build myself a system. As I'm listening to them, I plug in all the values of my system. So if by what they tell me, it makes sense, I'll tell them right away. I say, you know what? I think we have a loan. But in order to check if this is really a loan, I need you to send me, and I believe in a minimalistic attitude, in a minimalistic approach. I don't ask them for, send me this. No, I just ask them for the key paperwork to confirm what they said on the phone. Just to confirm it, that's all. Okay. If they do that, then I said, you know what? I think that this could be a real loan. Let's have a Zoom call because I want to meet you. I want you to meet me. Okay. Then on the Zoom call, I listen again. I show them my calculations. I have a very simple table with colors that I designed initially for myself, but now I share it with my customers. And I said, look, based on what you told me, this is what you can do. And then when they look at it and say, you know what, I like it. Or what if we change this? What if we change that? So they say a little bit of brainstorming. Once we come to a model that they want, I say, okay, do you want to apply for the loan? And they go, yeah, I want to apply. Then is when I go, okay, send me this. See, it's the complete opposite.
Yeah.
Then I say, send me all of this information because now that we're going to apply, we need to really make sure that these calculations we made are correct.
Okay.
And usually when they send me the real information, now there are things that need to be massaged, like the credit, the income, this and that, and so on. And this is where the qualification process begins. So by the time we go to the lender, by the time we do the application, it's a 100% for sure that they're going to be approved because we did all the preliminary work before.
Okay. Now tell us, how can we connect with you? Where can my audience find you? Is it a website?
Yes.
Yeah.
The best thing is to send me an email at info@prosperitylending.us.
Okay.
That's the same name of the website, www.prosperitylending.us. I mean, you can send me a direct email at alejandro@prosperitylending.us, but most people cannot write Alejandro, so info is better.
Okay.
That's the best way.
Okay. I'm going to leave all those information in the show notes so that people can reach out to you. And finally, Alejandro, thank you very much for your time today. I always want my guests to share one success tip to my audience so that they can learn from you. Yes. In terms of mortgage process, application, property, do you have one special tip that you want to share with us today?
Yes. This tip not only applies for mortgages, apply for anything.
Good.
Don't focus on the number. Mm-hmm. Don't focus on the mechanical, physical barriers. Mm-hmm. Focus on your dream. Right. Because when you focus on your dream, the physical universe bends itself and starts to give you the opportunity, things that happen like as if by magic. Okay. And this is difficult to do because you go, well, my credit is low. I don't have no money. How can I do this? It doesn't matter. Forget that and focus on your dream. It could be soon. It could be later. But if you focus on your dream and you ignore the physical barriers, you will get to your dream. See, this is what I tell my mortgage people. They call me and say, my credit is low. I was rejected. I said, no, forget about that. Forget about it. Just tell me what you want to do. No, but I will not qualify. No, forget it. Just tell me what you want to do.
The dream.
And then, okay, this is what I want to do. And that's what you need to focus on.
Fantastic. So there you have it, guys. If you want a professional mortgage broker, Alejandro is the guy for you. He's going to work with you with full focus, full attention, and I think care. I think, Alejandro, you really care about people from the way you talk. You really want them to get that property. So that is good. Thank you once again for your time here today. I think and I know with full confidence that my audience, they will find all this information very useful. Thanks again.
Thank you, Bola. Very pleased to meet you.
All right. Same here.
This episode of Winners Ways podcast has come to a close. We hope you enjoy and learn something from today's show. We want you to win and excel in all areas of your life, and we regularly explore and share information with our listeners to empower them to win. Be sure to subscribe to our podcast for more tips and strategies to help you find the success that you've always dreamt of. And don't forget to rate and review so that we can continue to bring you more podcast episodes to empower you. We will love to have you again next week. Now, keep winning.